following presentation is for educational purposes only. All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.
What's up, traders? Anthony Crudele here, and welcome to this week's Develop Your Edge. I'm waiting for my partner in crime, Tom. Tom, what's up, man? How are you, buddy?
Sorry, I thought I had a little more time than we did. Had to step away and take care of some family business. Everything is good. How about you?
I'm doing great. Going to talk about trading Nasdaq today. I'm going to talk about micro Nasdaq because I'm going to be in a swing position. I'm in a swing position short right now. I got my live stuff up here on the right. I got the Trade-of-8 screen share, and then I also have the NinjaTrader chart. So I think maybe we just kind of get right into it today and talk about why I'm short Nasdaq and just what we're looking at here.
Awesome. I'd love to hear it. Yesterday, we tried to go long and it didn't work. So interested to hear if some of the things that were happening yesterday are happening again today and why you're short.
So a couple of things. First off, anytime that I'm looking to trade Nasdaq or any market for that matter, it starts off with market environment. What's the daily tell me? I put out a free note every morning that discusses what I'm seeing in the market environment. I think we're in a consolidation, potential for mean reversion. So right away, when I look at that from that perspective, my thought process is I'm going against primary trend, right? Because if I think it's mean reversion, and I think that the market's consolidating, this is a great time to use micros. So initially, anytime you're looking at market environment, and we'll come here to the daily chart is where I start with that. I always want to have the mindset of position sizing because I do not trade every position with the same exact size. And there's always a lot of really good debate about this because some traders will say, well, you're never going to know which ones are going to be the bigger winners. So why even play that game? Because we're not smart enough. Just trade every position size the same. And I get that. I actually think that there's a lot of validity in that. I think for some of the really great stock traders that I follow, I think that's makes sense because they most of them almost only trade long, right? As a futures trader, because I trade short too, I look at the market and say, if the primary trend is up, my position sizing needs to be bigger for setups in that direction, and they should be smaller anytime I'm going against the primary trend. So if I'm looking at a swing position short in Nasdaq, do I want to be in full Nasdaq? No. Why would I? Right? Well, because I am never going to plan that trade perfectly. And the minute I get in, just even like today, the market's, it's ticking against me. So
right.
When you have that mindset, you position sizing is so important as a futures trader because most of you are probably trading too big in moments against primary trend. And that's where you get hung up the most. And so that's like the first mindset thought. And when we go to the daily chart, Tom, look at what are the technicals telling us? We got RSI. We talked about this recently. It's been way overbought. And we talked about this. And I think this is where I want to bring you in again, talking about like the RSI initially. Tom, from a CMT perspective, when it first gets overbought, is that the time to sell or how does that kind of pan out?
No, to me, that's a warning, right? That's just saying, hey, we're overbought. We could stay here for a while, but we're looking for that cross back below in outside of overbought situation to say, okay, maybe the trend is either stalling or even turning around. But going above, like you've pointed out right there, that's just saying, hey, this is in a trend. It's a pretty strong trend. And now we're waiting for an indication that this trend is slowing down.
Exactly. Right. I take that really to heart, everybody, because RSI is a great tool and it's probably the most misused tool because people look to say, oh, it's overbought. I want to start getting short. And until it comes out of overbought and it starts to come back down below 70, and I see Bollinger Bands start to come back inward. Right now, they're relatively flat, not necessarily coming back in that much yet. So it's not quite mean reversion to me yet, but it's pretty close. And what I mean by it's pretty close is that I want to see that Bollinger Band start to come inward. I want to see volatility start to come and shrink, and I wanted to see us get boxed in. And so what I do is I draw a Fibonacci retracement from the peak high to the peak low. And we're projecting right now that this peak high is going to be right around 21,000 and change, okay? Because the Bollinger Band's getting flat and starting to revert back in. I look at my 30% line, which is now 20,123. So this morning, right away when I saw that, I was like, okay. Right on the open, I saw that that Bollinger Band was getting flat and started to come back inward. I said, all right, maybe today on a rally, if we get up right around 20,120-ish, okay, I'll look for start putting on a swing position short, and I'll start to look to get short and accumulate shorts using micros. So once again, I'm going against primary trend. And I'll ease my way into this. I'm not in a major hurry to be short. I don't want to be the guy who tries to pick the top. I want to be the person who eases my way in. And if it starts to work, I'll consistently add to a swing position. Once I develop a core position, I'll start to look at, okay, how can I intraday trade that? So what I'll look at next is this volumetric chart. And we talked a lot about this lately, Tom, this volumetric chart. You have to have the order flow package on NinjaTrader, but I think it's one of the best tools that you can have out there in trading because it gives me perspective inside the candle. That's the key. You can see here, you have a 30-minute chart, you have a red candle, green candle, and so on and so forth, right? And it shows you what's happening within there. Blue on the right-hand side is the delta that favors the long side. On the left-hand side, you have magenta, which favors the sell side delta. Then I have a teal green set up, and I know it's pretty small, but you can see it there just because NASDAQ trades so many ticks. That's that high volume node in each part of it. So what it tells me is what's happening within the candle, and what do we look for, Tom, when we're trying to get short against primary trend? Squeezes.
Right?
We want to see the volume come in high on the lot on the highs, not follow through and rotate.
Right. And to be clear, these when Anthony says he's looking inside the candle, we're looking at the volume distributions. So it's not like breaking down price. It is price, but it's volume at price on the buy and sell sides, and then the accumulation. And you're right. We had a show a couple of shows ago on good highs and good lows, and that translates to squeezes essentially.
Exactly. So what I look for this morning is, okay, I watched the first 30 minutes. As I'm watching it, in my mind, I'm saying to myself, okay, you want to start selling rallies as long as we stay below 20,123. Opens up, starts going higher. I look for a couple of squeezes, and then I go down my short-term chart, right? So I'm kind of looking at this side by side. I'm not going to have them side by side up in here, but I'll just move that chart to a different window, and then I'll take a look at it. And that's what I was looking at this morning. And so you can see these are all my live trades from this morning and what I did. And I want to walk back to what I had done this morning. And I'm only trading micros. Once again, why? Because I'm going against primary trend. Anytime I'm selling NASDAQ in a bull market, I think this is the greatest thing that's ever happened, is that they've actually added micros, because I'll get up to, the mid double digits in the micros. But that's really because I'm scaling my way in, and I don't want to be all in at one price. I go back to it. I'm not in a hurry to be short, so I'm going to scale in, 3 at a time. And all these on here, everything I have set up is on 3 lots. And so this morning I saw opened up. I said, okay, let's see. Does the market start to go lower? It didn't. I did a quick scalp short. I went up. I saw 1-2 standard deviation. I sold it. Rotate back to VWAP. I bought it back. Rallied up to 1 and 2 VWAP, sold them, came back to VWAP. I'm using standard deviation, 3 standard deviations on a 3-minute chart, and I'm selling the standard deviations, and I'm rotating because I never know what the high is going to be. So when we go up and touch them, I'm like 3, 3, 3, rotate back, buy 6 back, try to keep 3. Each time I kept getting stopped out. And once I saw that, I was trailing them, so I was making a little bit of money here and there. And then the final 3 I was getting stopped out on. And when you look at the rotation here, where it came back to VWAP and held, you could see I did nothing in here. No marks on my chart. Then when we got back above VWAP, look what I did. I got up to like probably 30. I think at this point right here, I was short like 30 micros, because I was selling 3, 3, 3. And every time, once I saw that the high was the 1 standard deviation, I just scaled my way back out. And then I waited and waited and waited. I went back. You could see I did it again here. I started to add. Once it got above 2 standard deviation, I got stopped out. Unfortunately, it was pretty much the high tick on the balance there,
Right.
but I kept 3. So I kept 3 from 2,100, and I'll go back here on my dome and I'll show you. And so really today I have sold into a rally that's been pretty fierce. And I'm up a little bit of money, right? And I'm not down, but it's because I'm patient and I'm waiting for the pullbacks that are strong. And I was watching some of the volumes, and I'm waiting for 1 and 2 standard deviations, and I'm keeping my stops relatively tight, and I'm staying really small, because if I want to be short against primary trend, even though I think we're coming out from being overbought, I think we're in mean reversion, I do think that the market has potential to go lower. It's just not quite ready yet. So be smart. This is why execution matters so much. If I want to be a seller against a bull market, you want to be the last one in. You don't want to be the first one in. And so when the market gets up to prices, and if it doesn't respond right away, rotate out, be real small. And now you can see here, like I said, I'm sitting on short 3 micros, and I've got my stop. I always say is I'm doing for every 3 lot, or for every really position, I'm risking around 300. I've stayed consistent with that. So when I get up to 30, I'll probably be risking somewhere around, 1,500 to 2,000. It might be more, too much for some of you guys, but I stay consistent within my risk per trades and my parameters. So I always know where I'm at, and I keep my stops relevant to that. And so right now I have a stop at 20,156, and I won't cover this 3 lot unless it gets hit. And so I'll continue to keep shorting on the rally, and I'll let this thing go really until my major target is 19,527. Now, something could change along the way. There could be something that possibly tells me to change where I'm covering, and I'll try to trail my stops so this way I'm not risking the full amount. Like if it starts getting below the 5-day moving average or something, and I say, okay, I'm getting close to my target, why have such a wide stop? I'll move that down accordingly. And so that's my plan right now.
So really interesting. That VWAP, let's talk about the 3-minute opening range in VWAP, right? We talk about, you've talked about many times how that VWAP escaping that 3-minute range helps you kind of decide your bias. I'm interested to know, why you're shorting if the VWAP is trending up. Just
Big
curious.
picture supersedes short term. So if the daily chart is telling me to be short, I've got a 3-lot swing short on.
Yeah.
Right. And so today with the VWAP above the opening range, like I talk about, it's set up for a trend up day. Daily chart supersedes short term. This is to help me navigate short term. The 3-minute VWAP just for today is not the end all be all for me. The fact that we've RSI daily Bollinger Bands coming in, to me, we're topping out in the Nasdaq. Maybe not ultimately topping out. I'm not saying that, because I do think that the market probably continues higher throughout the year. That's a whole other conversation. But for me as a trader on a swing basis, I don't like being short. I tell you this right now. I used to love being short. I don't love it anymore, especially in Nasdaq. So I just stay really small. And when I see it on a daily, I'm being forced to do this right now. I'm being forced to do it because as time's gone by, I can go back and show you the NVIDIA recent high. I talked about this in my Discord. When NVIDIA was making that high, I was like, wow, actually it's giving me a sell signal. I'm not getting short NVIDIA, right? But my strategy, I covered my longs in my long-term portfolio, not all of them, but some of them. And because I said, you know what, the market's probably topping out, at least for now. Doesn't mean I'm bearish in NVIDIA. I just think that in the short term, the trade, as we manage our money, right? And I'm not funded. I'm funded by, by somebody else. I'm funded by my own money. So I've got to manage that risk at all times. And so what I look for is opportunity where I can manage risk and maximize reward. And for me, intraday, yeah, today might be a day where they stay somewhat bid, but if they can't get above on the daily 20,123 and that daily Bollinger Band comes in, this is my boxed out area. My range is 20,123 to 19,527. And the one thing that's key about this time is that I'm not flipping trading 2 sides of the tape right now. That's where most people get screwed up. I know I want to be short. I'm going to be short small. I'd rather have a small win day or a small loss day than try to overtrade it and overthink it. And so that's why I've committed to daily chart wins, but today's setting up bullish. Okay, I'll sell the big rallies. You won't see me sell a break.
Right, right, right. Now that makes sense. You know, those Bollinger Bands coming in, the RSI setup, you're right. It is looking a little bit toppy, but not necessarily the turnaround that everybody might be looking for that's bearish. And so, you know, diving back down into the 3-minute or even the volumetric chart, you know, looking for you know, those areas to sell makes sense. It would be on a, you know, rally rather than looking for a breakdown below that VWAP.
Exactly. And, you know, when I look at the market right now, if we stay below this, this is where it starts to head, right? And I'm never going to pick that top perfectly. It's the Nasdaq.
Yeah.
I mean,
yeah. Too
okay,
volatile.
look at
Right.
it's just, it's too volatile.
Yeah.
So, you know, like I said, today I'm selling anywhere between 3 and 30 micros as we rally, and I'm going to keep 3. In my mind, I've already committed. I'm going to keep 3. I'm going to keep $300 of risk on. That $300 of risk is already well in my favor. I can cover it right now for 1.5 to 1. And what am I up $400 on the 3 lot? It goes back to show you it's not how big you trade, it's how you manage your positions, right? I sold the rallies this morning, and all I did was make sure that I just did not get killed. That was my only goal. My only goal was, listen, man, you see this day is setting up potentially bullish. You know that the daily is telling you to be bearish. If you want to sell this rally, you sell it small, but you do not get married to short. You don't. I mean, I got stopped out a bunch of times. And eventually, when it finally started to stabilize, I rotated out of my last position and I kept 3 and I just leave my stop go. Because to me, that's how I manage it. That's how I'm going to manage really a day trade. A day trading mentality that leads into how I swing trade, because I try to maximize the day as best I can and then just leave a core position on. And there's nothing really I can do right now, actually, to add to this position. What I'll watch for is towards the end of the day, if we are going to have a daily close below 20,123 and this daily Bollinger Band starts to come back in, I might add to this and I'll continue to add to it. My stop will now be above. I'll move my stop down and I'll start to manage risk accordingly. I'll say, okay, 2123-ish is kind of my line in the sand. If it stays below there, I'm going to just continue to put on as many contracts as I feel comfortable with taking the amount of risk I'm feeling, you know, which is set for me. And I'll continue to add to those positions. You know, and it also will depend how far away we are. Like, what if we close today at like 19,850 with a target of 19,527? I might not be able to get in. But if we close right around 20,000, 20,030 or 50, I might say, okay, this is a relatively inexpensive short for me to add. I'm already short from 20,100. Now let me look to potentially add. And I hope I never add to it. I hope it just goes to 19,500, right? I mean, but I will, in my mind, I'm looking at it and I'm going, you cannot get aggressive with this. You already set the tone. I mean, this is the difference. When you set a plan as a trader and you come in, you know what you're doing. You know, for me now, it's just, can I best execute this?
Right.
And that's all it comes down to.
Yeah. And you're also kind of looking at a shorter term correction in the face of a longer term bull trend. So you do have to be careful, right? If you're saying, okay, I think we can get to 19.5, right? That doesn't mean we're turning bearish at all. That means it's a correction and could be, you know, that's again the longer term that you mentioned that we weren't going to go into, but I'm bringing it up again. You know, this is, you always have to be careful about that longer term trend. You know, expectations, I guess, time expectations. This is a swing trade. This isn't an investment.
Yeah, exactly. I mean, for me, it always comes down to execution for me, you know, and I'm just looking at, you could see here on TradeAvate, like I like to use the TradeAvate Dome, and you could use whatever you want. If you have Ninja, you can use the Ninja or the TradeAvate, and you look at my risk versus reward, it's 10 to 1, right? And so I'm comfortable with that. You know, and that's why I think the micros are such a great tool. Like, I'm able to make thousands of dollars risking hundreds of dollars. It's hard to do that with a bigger Nasdaq in these positions. Now, as I may accumulate this, the risk is going to get a little bit bigger, obviously. But initially, this is why the micros are really good for me when I'm going against the primary trend. when I'm going with the primary trend, I'm almost only using Nasdaq. I really don't use the micros that much. And I think it's such an important tool because as a trader, we go back to execution. Once you develop the plan, now your edge is in the execution, right? Develop your edge. It's the plan, and then the edge is in the execution. How do you manage it? How do you keep yourself in the trade? You know, everyone talks about, how do I hold winners long? How do I do this? Well, you hold winners long by, at least from my opinion, how I do it is I work my way into a position. I take some risk out of the position. I keep a core position that I already know I'm comfortable with losing. No matter what happens, I'm not trading out of this 3-lot. I'm trading around this 3-lot. And I'm only trading it in one direction. So I've already committed to it. This loss is already gone as far as I'm concerned. If I get stopped out and lose $300 in this trade, I've already accepted it. It doesn't matter. The market, so this way, the volatility right now doesn't matter to me. And this thing could go all the way down to a $2,000 winner. All I'm going to do is move my stop down based upon what the information is in front of me. I'm not going to manage it from a dollar amount perspective, right? Once my risk is determined, my edge is now in the execution and entering the market and exiting the market and what's in front of me.
So mentioning trailing stops, and you're not looking at it from a dollar amount. What are you using to trail your stop? Are you using the levels we see here, or are you looking more of an intraday look? How are you trailing your stops, generally speaking?
So for this position, let's talk specifically on this one. On this one, because one of the key things for me when I look for a mean reversion trade is that when we have a 5-day moving average, a simple 5-day moving average in my box zone, that I think that we're going to be either a mean reversion or consolidation. Okay.
Right.
That 5-day moving average, and you could use a 10-day, you know, it depends. I use the 5-day on the Nasdaq just because it moves so much that it'll just stay trendy above it or below it. I might use a 10-day in the S&P or like a 10-year because it's just not as volatile. So with this market, once I start to see daily closes below it, and I look at like just the recent swing highs, I just move my stops above there. And I don't really think too much about it, right? And it is what it is. I mean, because the Nasdaq, I look at it like this: a stop out is a good thing because there's no way, I can never predict how far this thing can go. It's just impossible. So a stop is just, it's a warm blanket, man, on a cold day, because when this thing gets below the 5-day moving average, if I got 100, 200 point lead on it, no lead is safe in the Nasdaq, especially short. So I just look at it and go, keep it simple. I'm comfortable with it because I know if this thing gets any sort of ramp higher, I don't want to just let it take advantage of me. I got to make sure I'm out. If I want to get back in, I get back in, right? If I look at it and go, well, that was not the greatest planned stop, Anthony, and look at, we're still in your zone, find a way using short-term charts again to execute, to get within my risk parameters and get back in. But that's all I do. That's why I like this 5-day in the zone. And you see this right here, Tom. You see how it's in, it kind of stopped right there and it's in it.
Right.
And so now it's in this sell zone. So if it starts to continue to move lower, if we were to go lower, you know, I'll look at that and say, it's just an easy guide.
Yep. Yep. You mentioned something we say often, which is in futures, you can just, if you can just get right back in, right? There's no cost to that. You just, you miss a trade, you get stopped out, you see the same setup or something similar, you can get right back in. That's a great thing about futures.
Yeah. I mean, most people over trade futures and they overthink them. That's just the reality. I mean, futures are a naturally leveraged product that you have to, because it's a naturally leveraged product, you have to really be picky. Most people aren't. Most people are in too much of a hurry. You know, they want to come in. They just, they can't wait.
They want to trade. Yeah.
They want to trade. And the longevity in this business comes, from my experience, by really being forced in. Like, I look at this short and go, I don't love being short the Nasdaq, but I'll do it. I'll be small. And I'm going to be really smart about it. I'm not going to be in a hurry. So I set the tone before it happens, right? So much of trading is setting the tone before you get in there, because most people are coming in and they're trying to adapt to the action of the day versus letting their plan play out and then just tweaking their execution on position sizing based upon the action of the day. Most people are totally getting focused on, well, today is this, and they're trying to do that. And then that's why most people burn out and they don't last very long. You see like this window of opportunity where I see a lot of traders, they'll come in and then they'll get hot and then they'll make a lot of money. And then all of a sudden they're just like, they're so cold. And it's just because their mentality was, I got to this point, I did this, I'm going to keep doing this. And they expected something to work and to continue to work. It just doesn't work that way in this business. I wish it did. I wish the same thing I did when I, had my first big year is what I'm doing now. It's not. You have to adapt on a bigger cycle basis, right? So you have to look at what's the market environment. That's why I say it's so important. That's why I put out a free note every day for everybody to understand psychologically how you come into the day. Because people always ask me, they're like, well, how does this note help me? You're not telling me where to buy and sell. I'm not here to tell you where to buy and sell.
Right.
I'm here to help you develop an edge. And your edge is understanding the market environment. And we're all subject to the market environment. And if the market environment is conducive to our strategy, we all do well, right?
Right.
You can look at a technician, Tom, in a bull market, selling a subscription about buying, dips or whatever, they're only trading stocks. Of course, they look like a genius because everything goes up. Maybe not in this market. There's a lot of stuff that's not going up, but that's a different day. But when everything goes up, everybody looks smart. And then all of a sudden when it changes, well, your same technical, work, your same, everything you've done stops working. And then those people get weeded out. And that's the cycle of this business. And so that's when you think about this as a whole, that's why you set the tone prior to coming in. And when you get in there, that's when you come in and you use tools like we have here with Ninja. We have, when we talk about, just a 3-minute opening range VWAP. I know because today is setting up potentially as a bullish day. I'm not in a big hurry to be short. I can be short, but I've got to sell the rallies. You could see it in my markers today. Not one short below the VWAP, not one short at the VWAP. Everything was above it because if I could manage risk more effectively that way, right? And we go to the volume chart. I look for areas where the market was getting really pushed higher with high volume deltas to the buy side, and then we rotated off it. Okay, I have some confirmation. I have some edge. That helps.
Right. Yeah, I love it. So much to unpack here and so much knowledge about, how to trade even in this to me is also a primer in how to trade in a non-trending market, right? We've seen a little bit of flatness, consolidation, like you say, not quite constriction on the bands, not quite expansion. And even today it's slightly bullish, but it's not crazy bullish. And yet you're telling me you're shorting a slightly bullish market and you're doing it successfully. And that to me is pretty great.
And once again, it goes back to where people say, I'm not in this business to be right. I'm in this business to make money. Like this kind of plays into that. Yeah. And it plays into it in the sense of this morning we rallied. Okay. Yeah. I was short. The market went higher. Was I technically wrong? Well, I mean, initially, yeah, but the way I managed it, it worked out for me, right? It's all about me just being smart in the way I executed the position, not by me coming in and just being short, right? And so that's really where that stems from, where people say, I just want to make money. I don't need to be right. And you have to put that ego and all that stuff aside. You have to slow things down. So when you come in there, you're in control of your decision-making. Right? Mm-hmm. You have to have some acceptance of risk. I put this position on, I've accepted it. And this is what it's going. This is what I wanted to do. Right? It doesn't matter. All of a sudden, the market didn't change that much from my plan that I had 5 minutes ago. The market is just not doing exactly what you thought, but in some ways it did kind of do what I wanted it to do, rally up to the area I wanted. I tried to short it beforehand. It didn't work. And then eventually when it started to, slow down and it came back, like right now, you see the delta's actually gone negative on the day, which is pretty interesting, Tom, that we went from positive delta to negative. But once again, that's why you're patient. You have risk parameters, right? Sometimes you nail it and everything works great. Other times it's, it's blue collar, man. You're coming in there and you're grinding it out, and it's going to take you a little time for the trade to eventually work out. But the key is to keep yourself in the game, stay in the game. And that's where you have micros and, you have different markets and position sizing to allow yourself to best manage your trade.
Awesome. Thanks, Anthony, for all of that. Do we have any other business with to talk about? Yeah, we do. Sure.
I see a lot of people talking about corn lately, and I put I'm not the ag guy, right? And so I wanted to put it out there that, make sure there's grain and oilseed futures and options. We've talked about this from an ag perspective here on this show on Develop Your Edge. This is where the true prices take place at CME Group. So to know that there's corn and soybean futures and options available at CME, it's extremely important for traders to know that's where that price is taking place. When you see people talk about these markets, understand that they are futures markets and they're available here on Ninja.
And that's the original markets, right? From the
OGs, man.
right?
Those are the OGs.
1848, whatever it is. Yeah, that's good news. We do talk ags with Sterling Smith. I don't know if you know Sterling, great guy. And we'll have him next week because there's a big report actually coming out. The planting report is coming out later this week. So it's a yearly report. It's pretty big. But yeah, certainly the original futures contracts from almost 200 years ago are grains. So thanks for that, Anthony. And we're going to take a little break from Develop Your Edge for a couple weeks, right?
Yeah, we're out. We got 4th of July. I want to wish all my fellow Americans a wonderful 4th of July. The following week's my birthday. I'm out that week.
All right.
So look for me on Twitter there at Anthony Crudele. I'll probably have some posts out. So I'm going to do a little traveling and just take a little pause, a little break. First real break of the year, Tom. We're going nonstop. I feel like I haven't left my studio the whole year. I did get a little in here and there though, Tom, but yeah, everybody, that's it. We'll be back in that. And I want to tell everybody, if you're on my YouTube channel today, you got Marty coming on at 11:30, Tom. It's cool.
I know.
I love Marty. He's the best.
I know, it's great. I want to wish you a happy birthday and happy Independence Day. And we'll be back in 3 weeks to do this again. But again, thanks, Anthony, and safe travels,
everybody. Thanks. See you, everybody.
All of the symbols, trading ideas, and live trading are for demonstrational purposes and are not recommendations or trading advice. Past performance may not be indicative of future results. All of the information and opinions expressed by third-party guests are their own and are not necessarily those of NinjaTrader LLC. Trading futures involve substantial risk and may not be suitable for everyone, and trading futures can result in losses greater than the initial required margin. Traders should only trade futures with risk capital. Risk capital is money that you can afford to lose without jeopardizing your financial security or current lifestyle. You can find additional disclosure information on the NinjaTrader website.